Hello everyone, welcome back to All Financial Discussion channel. For this video, I'd like to continue the discussion on US stock market. So now we know that US stock market is at or probably near the all-time high. So the first fundamental question that we should ask that, is this make sense? Okay, so because with US record debt and also you realize that the consumer spending is very cautious, so why US stock market is still at or maybe near the all-time high? So basically this video, I will explain why. Before I continue, guys, I hope you can help me by like this video. Just give me a few seconds. Help me. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe and turn on your notification bell. Once again, thank you so much for strong support. A quick disclaimer. This is not a financial advice. Please conduct your own independent research and consult a professional if needed. Never invest more than you are willing to lose. With this, we are ready to kickstart today's discussion. To me, the US stock market should crash 1 year ago. Okay, but looking at current status, okay, the US stock probably will be at or near the all-time high. So this video, I will explain why this actually occur. On my previous discussion, I have discussed the 5 red flags. You can see that these are the 5 red flags. They actually predict that US stock market should crash. Currently, they are all crashing rate now. So basically now, why isn't the market crashing? Okay, so basically all this will discuss in deep detail. Let's study the US stock market through the S&P 500. As I mentioned earlier on, to date, okay, so S&P 500, they are at or probably near the all-time high. Okay, so one conclusion that I want to draw is based on the year of 2020. Based on this year 2020, I will say that anything before 2020, the economy is actually nature. While after 2020, I will say that the economy is actually unnatural. So later on, I will explain the meaning of nature economics and unnatural economics. I am not too sure whether you still able to recall this event, COVID-19. Okay, so this COVID-19 actually occurred at 2019. However, the major impact to business actually occurred at 2020 because of lockdown. Almost all the business is down by many times. And because of this, okay, US government actually print the money. Okay, so just want to be fair to US government. Okay, not only US government, in fact, all the government in the world, majority of them actually print money. Okay, so they print the money to support healthcare, to support defense, to support infrastructure, etc. So basically, they want to save businesses. What happened here is basically all the printed money actually flow into the business. So what happened here is when the money actually flow into the business, for example, okay, the S&P 500 companies, they actually reported record profit. Okay, so this is the reason why. So once they report record profit, okay, you can imagine that their share price actually will rise. And because of this special event, okay, which is so-called the unnatural event, okay, all the share price of the majority of the US stock actually rise because of the printed money actually roll into the business. One of the reasons of record profit is because of inflation. Okay, so let's take a look on this inflation chart. Okay, so you can see that, okay, after the year of 2020, you can see that the cost of almost everything actually rise up. Okay, so basically this is the definition of inflation. The cost of anything actually rise up. In fact, it become a very big concern when the inflation become 8%. Ideally, okay, the inflation should be kept around 2%. Although now it's much better, but however, if you take a closer look, you can see that this inflation cost is actually still higher as compared to the earlier years. Okay, so basically this is a key concern. Let me explain why inflation can cause a record profit. Let's study these two examples. For example, in the year of 2023 and also in the year of 2025. For example, okay, at the year of 2023, okay, I can sell one coffee for $3. And let's say I sold 100 coffee. So basically, I can actually declare that I actually have $300 in revenue. However, in the year of 2025, because of the inflation, I need to increase my cost of the coffee. So therefore, I decide to sell at one coffee at 450. Now, let's say I'm still selling 100 coffee. Okay, so now instead of 300 in revenue, I can declare that I actually has $450 in revenue. Basically, from here, you can see that it's basically something to celebrate because you have a revenue of 50% more. But is this the real case? As you can see that the number of coffee that you actually sold is actually still the same, which is 100 coffee. But however, because of the cost, you actually can declare that your revenue actually increased by 50% more. Okay, so in short, okay, the business does not grow, but in short, the cost of anything, okay, for example, the coffee powder, the labor charge, etc., the rental, they actually raise up. And because of this, you are forced to increase the cost that you actually sell your coffee. So basically, this is actually the so-called issue of inflation. The business does not really grow. However, you actually declare a record revenue. This actually result indirectly a record so-called stock price. With this, okay, guys, I need your help again. Okay, I need to urge you guys to help me by like this video. When more you guys actually help me to like this video will have a better chances to reach out to a larger audience. So guys, give me a few seconds. Help me. Press the like button now. For those who are new to this channel, and if you want to encourage me, please consider to subscribe to this channel and turn on your notification bell. Once again, thank you so much for strong support. Although I have used US for the illustrate example, but you can imagine that this is actually not applicable only to US, in fact, around the world. Because of COVID-19, almost every government actually print the money. And in fact, this money actually flow into the business. So therefore, business report all-time high profit and hence the share price actually rise. Basically, this is the key reason why the share price is at or near the all-time high currently. Let's take a look on the situation. Okay, again, I like to illustrate US situation. I'm going to study three current situation: US deficit, US consumer credit card debts, and last but not least, US retrenchment. Let's come to the US deficit first. Okay, as you can see from here, okay, you can see that a very outstanding, okay, basically at the year of 2020. Because as I mentioned earlier on, US government actually print the money and therefore they run the highest US deficit at 2020. Although the deficit actually improved, okay, but there is still more room for improvement. Because of the high deficit, again, you can see from this diagram here, you can see that US interest, okay, on the US debt is actually rising in a very alarm manner. So this is also one of the reasons that US stock market shouldn't be at the record high currently. The next reason, okay, will be the US consumer credit card debts. Again, from here, you can see that the credit card debts actually rise up dramatically. Okay, you can see that there will be a very strong chance that US consumer may not be able to fully pay their credit card. So this is actually a very worried trend. Okay, whether the consumer will spend, okay, actually will look at this credit card debts in the US. This actually indicate that the confidence to spend is actually getting lower and lower. This is the second current situation. Again, deny that the share market should not be at all-time high currently. Coming to the third one, which is the US retrenchment. Okay, I guess from this figure, you know that there are various companies, big or small, they actually do some form of retrenchment. Why? The business is still the same, like I mentioned earlier on, and in some cases, the business actually reduced. So therefore, in order to remain profitable, okay, the companies has no choice but to do some form of retrenchment. So this is actually the three situations, okay, that mean that the stock market in US should not be at all-time high. The first will be the US deficit, second, the US consumer credit card debt, and last but not least, because of the US retrenchment. Now, let me focus what you're supposed to do now. The first thing is you need to be very cautious now because, okay, a lot of market risks, they are in fact more visible as compared to the usual. Some analytics actually point to the risk hiding beneath the recent stock gain. For example, we have a mixed corporate earning, which means that not all the company actually earn a lot. Okay, in fact, there will be some that actually do quite poor. Cooling labor market, as you can see that from the retrenchment and the elevated valuation. Okay, so basically the price to earning. Next will be the long-term outlook actually suggests that uneven monetary policy, polarization, and volatility. Okay, so this could shape the market in 2026. Next, okay, even though stock like the Magnificent Seven, okay, they have definitely driven very high return. However, this does not represent the rest of the stock market. For some, in fact, they are struggling and their performance are actually quite poor. Next, the investor and also the institution, they are actually preparing for possible correction. Okay, because of this correction, so therefore we need to reinforce cautious. Next, we're supposed to focus on long-term principle and also the risk management. Always remember this: diversify, diversify, and diversify. Okay, so basically, this is the keyword. We need to diversify our investment. We need to spread our investment across many, many different types of sector and even many, many type of asset type. Okay, so this in fact can reduce the risk during the volatility. Next will be on the defensive position. Okay, so you know that we need to be cautious. So don't put those on the high risk so-called stock. Put on some form of defensive stock. For example, we have the stable sector. Okay, for example, the consumer staples, utilities. Okay, so they are actually quite resilient. Okay, when the stock market actually comes down. Okay, because okay, all their demand is still intact. So definitely for this case here, you can focus more on the defensive so-called stock market or maybe even for bonds. Okay, so these are definitely suitable in a high risk and in a uncertainty time. Next, avoid chasing short-term trend. Okay, so basically don't always chase the shining star. Okay, so basically you need to keep this in mind. Okay, so last but not least, in terms of the investor, okay, so basically for the investor, you need to be patient and you need to remember this. Your investment supposed to be a long-term mindset. Okay, so keep this in mind, then you will be quite safe in this so-called unknown territory in the year of 2026. Next, okay, thing that could make the market bumpy. Okay, so first thing is the possible valuation. Okay, they are actually quite high as compared to their fundamental. This means that the stock could fall if, let's say, their earning actually disappoint. Okay, for example, the structural risk. Okay, like for example, I don't think we will have a high interest rate anymore. Okay, so I believe that we will still have some form of interest cut in the year of 2026. Okay, but most of the time, I believe that the interest rate will remain the same. Okay, definitely we have some form of inflation pressure, or maybe let's say some geopolitical tension. Okay, for example, like US. Okay, they probably have some tension with China, etc. So all this can put into so-called unnecessary, so-called unsure territory. Some institution investor actually assign significant probability, in fact, close to 50% that we are going to have 10 to 20% of correction in 2026. Next, okay, always keep this in mind. First, don't put money in stock that you can't afford to lose. Okay, so this is what I also highlight during the disclaimer. Okay, never invest something that you are not afford to lose. Next, set clear goals and timeline. Okay, so basically you need to decide whether your investment belongs to short term or long term. And with this, you actually may have so-called different strategies to invest. Next, always diversify. Okay, diversify and diversify. Okay, rather than put everything all into one fund. Okay, so this can be quite dangerous. Consider the cost, tax implication, and also your emotion comfort with drawdowns. Okay, so make sure that you can control your motion, your emotion. Okay, if the price drop quite rapidly, make sure that you don't have the urge to sell it. Make sure you understand, make sure you have a plan. Next, avoid trying to time the market. Okay, so in short, there is no one that can able to time the market. There's always a saying, buy low, sell high. But how can you always ensure that you are able to buy at the lowest and you can always sell at the highest? It is not possible. Okay, so basically, this is what you're supposed to keep in mind in order to have a very successful investment. With this, I'd like to end my discussion. Please help me to like this video and subscribe to this channel. Once again, thank you so much for strong support. I hope to see you guys soon. Bye for now. Thank you so much.